Assalamualaikum warahmatullahi wabarakatuh. I am Muhammad Afiq and here are the 4 Islamic financial management strategies that we can practice for the year 2023. Before we go further, there are 5 main areas in Islamic financial planning, which are firstly wealth generation, second wealth protection, thirdly wealth accumulation, fourth wealth purification, and last but not least is the wealth distribution. So for the first strategy is seeking halal source of income. The sustenance and abundance of God's blessing is very wide, and we are advised to find a halal income that is a job or business as a result of honest efforts, free from fraud or corruption, not involved in illegal matters. So a Muslim who has faith will avoid falling into riba, alcohol, gambling and other things prohibited by the religion of Islam. Second strategy is to subscribe to Takaful as a preparation for disaster. Takaful is a protection product based on Sharia. Takaful contracts differ from insurance because they use the concept of helping each other among Takaful participants. There is no element of interest and uncertainty or gharar as in conventional insurance contracts. The general public sometimes faces a dilemma when Takaful agents promote the protection plans available in the market. This happens because there are terms that are not well understood and the agent does not provide sufficient explanations in a language that is easy to understand. Takaful products are a necessity for those of you who have dependents and as a preparation to face calamity such as illness. Think of it as an expense for the future. Takaful participants make monthly contribution at predetermined rate. This contribution seems small because it is made consistently every month. In the event of an accident, the Takaful operator will pay protection benefits to participants. All participants in the Takaful plan seem to hold hands. If one participant falls, the other will help and lend a hand so that he can get up again, or at least his family can rise from the financial burden that has hit them. The third strategy is investing without debt. The goal of investing is to add value to what you own. Financial experts do not encourage you to invest through loans. Every investment has its own risk. The level of risk depends on the type of investment you are participating in. Investing in shares has the potential to earn high profits. The risk is also high compared to investing in shares of trust unit. Low risk, low profit. A loan will bind you to a debt commitment. Debt needs to be paid regardless of whether you make a profit or incur a loss. Therefore, debt will add to the financial burden if not managed properly. Failure to pay debts or loans, especially to the bank, exposes you to another risk of being sued or declared bankrupt, which is in severe cases. Do not bind yourself with debt. If you can afford to pay a certain amount to pay off the debt, just use that money to save or invest in shares or share trust unit. And don't forget to choose investment that are Sharia compliant. And the last strategy, number 4, is paying zakat and charity or infaq. Zakat is the fourth pillar of Islam and is the economic responsibility of every Muslim. Zakat is levied on property that has sufficient amount, nisab and duration or haul. The zakat center receives zakat payments and distribute them to the 8 groups that are prescribed as zakat recipients. Zakat does not reduce wealth at all. The rate of 2.5% of income means a lot for the needy. Indirectly, zakat issuers carry out their social responsibility to fellow believers. Infaq or charity is complementary to zakat. Anyone can give charity regardless of the amount of wealth and it can be done at any time. Donating a portion of wealth is a characteristic of pious people. So that's it. That's 4 strategies that you can implement for your Islamic financial planning for the year 2023.